Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about INNOCARE Pharma Limited annual report. INNOCARE Pharma Limited is a biopharmaceutical company that specializes in the discovery, development, and commercialization of drugs for treating cancer and autoimmune diseases in China. The company has developed several innovative treatments across various stages of clinical trials. The company's pipeline includes orlabrutinib, a BTK inhibitor for treating patients with relapsed and or refractory chronic lymphocytic leukemia and other types of lymphoma. INNOCARE Pharma is also developing ICP-192, a pan-FGFR inhibitor for solid tumor patients, including cholangiocarcinoma, and ICP-723, a pan-TRK inhibitor for neurotrophic tyrosine receptor kinase fusion-positive cancers. In addition to these treatments, the company has developed several other innovative therapies. These include ICP-332, a novel tyrosine kinase 2 inhibitor for autoimmune diseases, ICP-BTWO, a bispecific antibody for lymphoma treatment, and ICP-33, which is being tested for liver cancer, renal cell carcinoma, colorectal cancer, and other solid tumors. INNOCARE Pharma's pipeline also includes treatments for hematology and autoimmune diseases, such as ICP-248 and ICP-490. The company has a clinical collaboration with Revent Biopharma to evaluate the anti-tumor activity of ICP-189 combined with furmonertinib in patients with advanced non-small cell lung cancer. The company's portfolio also includes several other treatments, including ICP-B4, tafasitamab, for DLBCL/hematology, and ICP-B5, an anti-CC chemokine receptor 8 monoclonal antibody for various cancers. Overall, INNOCARE Pharma Limited is a leading biopharmaceutical company in China with a strong pipeline of innovative treatments for cancer and autoimmune diseases. The list of businesses and services provided by INNOCARE Pharma Limited includes developing BTK inhibitors for lymphoma treatment, developing pan-FGFR inhibitors for solid tumor patients, developing pan-TRK inhibitors for neurotrophic tyrosine receptor kinase fusion-positive cancers, developing novel tyrosine kinase 2 inhibitors for autoimmune diseases, developing bispecific antibodies for lymphoma treatment, developing treatments for hematology and autoimmune diseases, conducting clinical trials in collaboration with other companies, commercializing drugs for cancer and autoimmune diseases in China. INNOCARE Pharma Limited maintains a market capitalization of $26 billion, broadly in line with the industry peer group. INNOCARE Pharma Limited trades at a higher price-to-earnings ratio of 30 times and a higher price-to-book ratio of 3.02 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The balance sheet appears very conservative, with liabilities representing only 28% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets in equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a company can be attributed to several key factors. Strong sales growth of specific drugs, such as orlabrutinib and tafasitamab, has been a significant contributor to revenue increase. Licensing revenue from collaborations with other companies, including Zenas Biopharma and Prolium, has also played a crucial role in driving revenue growth. In addition to these factors, upfront payments and potential milestone payments have provided a substantial boost to the company's revenue. Tiered royalties on future net sales of INNOCARE products have also contributed to the increase in revenue. Furthermore, increased sales volume has resulted in higher tax recoverable and inventories, adding to the overall revenue growth. The company's unique leadership position in R/R-MZL, relapsed or refractory marginal zone lymphoma, has enabled it to capitalize on its market dominance. Enhanced commercial execution, improving patient compliance and treatment duration, and regulatory approvals in Greater China have also contributed to the revenue growth. The inclusion of orelabrutinib in the National Reimbursement Drug List, NRDL, for 4 approved indications has further boosted sales. Commercial launch in mainland China and inclusion in Huiminbao programs across 35 provinces and municipalities nationwide have also driven revenue growth. Physician adoption due to clinical positioning and recommendation in CSCO guidelines has been another significant factor. Finally, contributions from business collaboration revenue, including government grants and foreign exchange gains, as well as increases in trade and bills receivables, and growth in drug sales and R&D services receivables, have all contributed to the company's revenue growth. The net income of the company underwent a significant transformation, shifting from a loss of RMB 452.9 million to a profit of RMB 644.2 million within a year. This marked a turning point for the company, as it became profitable for the first time. The net income increase was substantial, with a 135.3% year-over-year growth. The improvement in net income can be attributed to various factors. On page 5, it is mentioned that robust commercial execution and value realization from strategic collaborations contributed to the improved profit margins. Additionally, on page 20, it is noted that operational expenses played a role in the improvement of profit margins. However, there was also a slight decrease in gross profit margin, as indicated on page 61, where it decreased from 86.5% to 91.8%. Nevertheless, this trend reversed on page 62, where it is stated that the gross profit margin increased by 5.7 percentage points from 86.3% in 2024 to 92% in 2025. The company's financial performance indicates a positive trend in its operating cash flow. In 2025, the company generated RMB 1,434,119 in cash from operations, demonstrating a significant increase of RMB 51.3 million over the previous year. This substantial growth in operating cash flow suggests that the company is efficiently managing its resources and generating sufficient revenue to cover its expenses. As a result, it can be concluded that the company is indeed generating positive operating cash flow. The company's debt level has experienced some fluctuations over the period under review. According to the extracted summaries, total indebtedness increased by 1.8% from RMB 1,051 million to RMB 1,087.5 million. Additionally, interest-bearing bank borrowing saw a significant increase of 24.4%, rising from RMB 193,797 to RMB 241,161. However, it is essential to note that the overall debt level has not changed significantly, with an increase of only 1.8%. Furthermore, there is no clear indication of a substantial decrease or increase in interest expenses across the various pages reviewed. The lack of significant change in interest expenses suggests that the company's financial obligations have remained relatively stable over this period. Management is optimistic about the company's outlook and strategy. The key areas of focus include continued investment in market promotion, education activities, commercialization expansion, and clinical trials. This suggests that the company is committed to driving growth through a combination of marketing efforts and scientific research. One of the most significant developments is the expected delivery of clinically meaningful data readouts from sofositinib, ICP-332, by 2026. Additionally, ICP-488 has shown promise in treating autoimmune diseases following positive phase II results, while ICP-538 has demonstrated robust preclinical efficacy with potential to deliver clinical benefits. The company's strategy also involves expanding its solid tumor pipeline through the submission of at least 2 more INDs within 2026. Furthermore, globalization will remain a core pillar of the company's strategy, with a focus on selective out-licensing, co-development, and regional partnerships. Hematologic oncology is expected to provide increasing clinical, regulatory, and commercial catalysts for the company, indicating that this area will be a key driver of growth. Overall, management's comments suggest a strong commitment to driving innovation and expansion through strategic investments in research and development, marketing, and globalization. That concludes the financial summary for INNOCARE Pharma Limited. Feel free to comment below, and I will be happy to answer them when possible.